You're listening to The Whole Truth, a Resources Rising Stars podcast.
Hello and welcome back to The Whole Truth podcast. I'm Paul Armstrong. I'm here for another great episode of this podcast with David Southam. He's the Executive Chairman of Cygnus Metals. One of the things that comes out of our chat is that there's a great opportunity here because the company has been working on the sausage, as they say, not the sizzle. David and his team have established a big resource at the Chibougamau Copper Gold project in Québec in Canada. They've just announced a 78% increase in their measured and indicated resource, and importantly that means they now have 2.2 million ounces of gold equivalent at 4.5 grams per tonne, which means they have genuine scale. The question is, why isn't the share price going up? And that's what we explore in this episode of the podcast. There seems to be a disconnect between what they now have in terms of an inventory and where the company is at in terms of its market value. It has a market cap of $100 million. That includes $20 million in the bank. So with an inventory like that, the question is this stock going to go up? Canaccord certainly thinks it does. They've just put a 30-cent price target on the stock. The company is drilling. They're working on updated economic studies, which will take into account the big increase in gold and copper prices that have taken place since the original study in 2022. So there's several key planks that David says are going to drive the share price. But importantly, one of them is the fact that he and his team are going to get on the front foot and start selling this story around the world. They've done the hard bit. They've established an inventory. They're still drilling to grow that further, but now they're about to get out and tell the world why they have something so substantial on their hands, gold and copper in a tier 1 location. David, $100 million market cap, including $20 million in cash, a new resource estimate of 2.2 million ounces at 4.5 grams per tonne. Those numbers would appear to have a bit of a disconnect. Are you a bit frustrated?
That would be a fair comment that I am frustrated, but I think it's with good reason. You know, the company, we only acquired this asset 9 months ago, and we set up a strategy where we said we'll find a new resource, we'll try and upgrade the resource. But the third prong to that strategy, we thought there'd be a bit of M&A in the copper space, but also within Chibougamau. So 9 months later, we've exactly delivered two of those items. We've found a new resource in Goldeneye, and we've substantially upgraded our mineral resource across the entire Chibougamau project. So it's really been a period of us about show me rather than tell me. So we probably haven't got onto the front foot from a marketing perspective. Rather than just talk about what we were going to do, we wanted to have that evidence. And I think with the resource announcement and a few items that have probably been lost, and I'm hopefully going to lead you towards asking me those questions, points to that disconnect. And once we educate the market and they actually realise, wow, there's actually something quite special here, hopefully we'll see a re-rate.
Right, so you talk about the resource increase. So you've just put out this updated resource. We quote the figure of 2.2 million ounces of gold equivalent at 4.5 grams per tonne. I mean, that is genuine scale by any measure.
Oh, absolutely. And we are a copper gold project.
The two metals that the market's looking for.
Oh, absolutely. If you have a look at M&A activity, people are looking for copper and copper gold. A lot of the gold companies are trying to find copper exposure. Some have done it successfully, some are still looking. So we have those two elements, and by the way, we actually added in around 3 million ounces of silver into that resource. So you've probably got the three hottest commodities on the planet outside of some exotics, but that are priced favourably but with substantial upside. We've got those. So we're able to report our resource in both a copper equivalent tonnes, which is around 488,000 tonnes of copper equivalent. Now, I am talking in JORC code and not the Canadian code, where I'm not allowed to add those two together, so bear that in mind.
But anyone who reads the release can add them up in 2 seconds. So
that would be the logical position.
And when you do that, you arrive at 2.2 million ounces of gold equivalent at 4.5 grams per tonne.
Which, being involved in gold for so many years, that benchmarks exceptionally well. That latest gold deposit that we've delineated called Goldeneye, it only goes down to 300 metres. There's infrastructure in place, and that's over 5 grams per tonne. So,
And we're not talking in deepest, darkest Africa here. We're talking in Quebec.
yeah.
So in a well-established mining region, as you say, this has got a historical mining record. That's why you've got all the infrastructure there. So we're in a highly attractive tier 1 location, as they say. But so the question, let's get back to the whole proposition here. $100 million market cap, including nearly 20 million in the bank, with that 2.2 million ounces of gold equivalent at a very good grade. I mean, high grade is an overused phrase these days, but at 4.5 grams, I think anyone would say that's a high grade resource. Now, so what drives the share price from here? How do we say to people, hey, the reason this is going to go up is because? Finish that sentence.
The reason it's going to go up because is people are actually going to realise that we have delivered, and we've delivered a substantial upgrade in the resource. So I think companies need to not just talk about things, but actually show that they can deliver. We're now showing that. So now we need to educate the market. So we're going to be on the road a lot more and talking to our investors and potential investors. I think, whilst we're continue to grow the resource, and we've got 2 drill rigs running at another target right now that we're drilling called Cedar Bay, there'll be news flow in respect of that. We're also going to update the PEA, or in Australian terms, a scoping study that was completed back in May 2022. And if you speak to any analyst...
That was prior to your ownership, of course.
This was prior to our ownership, and we've been unable to talk about those economics, which we believe we will be able to talk about now with an updated study. We've got Asenco, who is familiar to a lot of investors, working with us. The gold price that was used was $1,800 gold an ounce. Today, it's $3,700 an ounce. The consensus is around $2,600. So you get an immediate uplift. The copper price was $3.70. It's now $4.50. Silver is heading towards $50 an ounce. You change those metrics with what was the previous study of...
And lower smelting charges, presumably.
Oh, the companies, smelters are actually paying you to send copper concentrate.
So there's a massive tailwind on every front in terms of the inputs into that study.
Huge, and that's why some of the analysts, when they've put out their reports, have talked about the doubling of pre-tax cash flows from previously, which was around 700 million Canadian to 1.4 billion.
So what you're saying is between the fact that you say you're cheap based on what you've already established, the 2.2 million ounces and the current resource, you talk about the scope to grow the inventory at these places, Goldeneye and others, and then you talk about the pathway to cash flow and the substantial uplift in free cash flow versus the 2022 study. So there's 3 reasons that you would say are why you think the price is going to go up. But obviously some of the analysts agree with you. I mean, I saw a note the other day from Canaccord. They're talking 30 cents a share. What is it today? 11 cents. So obviously, it's not just a case of the chairman saying we're cheap. Others obviously share that view.
Yeah, well, I'm not the first mining executive who's going to feel that we're undervalued, but at least I tell the truth. So that's point number 1. But there is also quite a lot of M&A activity, and our project screens exceptionally well. And if you think of...
So that's a fourth pillar, a fourth reason to
and look,
be optimistic about the price.
That's always high risk, and I'm not saying that there's a deal on the table at the moment or anything like that, but there's certainly a lot of things going on around in the Chibougamau district, and I'll point out we are the only mill for 250 kilometres right next to a mining town with connections to hydro with, as you say, a 2.2 million ounce gold equivalent resource. That puts us in a pretty strong position. The capital intensity to build our project using those old PEA numbers is about 7,500 a tonne. New World Resources that was recently taken over without that infrastructure, with double the capex bill, is about $14,500 per tonne, and one of Canada's most high-profile copper stories called Foran is $32,500.
So you're saying that the low capex relative to other like projects would also, it makes it doable, but I suppose for this purpose of this discussion, it also says that it puts more of a target on your head.
Look, I never will promote that we're a target, but I feel certainly more vulnerable at this share price than at a Canaccord share price.
Vulnerable. Is vulnerable the right word? If you're a shareholder and you've got the stock at 10 or 11 cents, it's a nice way to be vulnerable.
It's all about perspective, isn't it?
Yeah.
On when you buy into a stock. I have to say that our institutional support for a $100 million market cap is exceptionally strong. We've got a New York fund that has 12%. We have an offtake provider. So remember, our copper has been qualified for sale. It has virtually no deleterious elements. It is a perfect blending copper con. They're hard to find that don't have deleterious elements. Well, that commodity house has 10% of Cygnus as well, let alone management and insiders with 10%, where we've all put in our own money because we believe in this project. So we are 100% motivated to get the right outcome for shareholders, no matter what form that takes.
So let's look at what the next 6 to 12 months holds. Let's break those various growth drivers down. Inventory growth.
Yep.
You're drilling now?
We're drilling now. So 2 drill rigs at Cedar Bay, which already has a very high-grade gold copper resource. And I want to make sure I highlight something that you brought up earlier. There's 3 million ounces, over 3 million ounces of gold and 1 million tonnes of copper that's come out of our region. We now control most of that region. We've used AI to generate targets such as Golden Eye and have made.
Now, this is an interesting point. You say you've used AI, but it's a system that you've developed in-house, isn't it?
Yeah, correct.
Yeah. So how does it work?
Not necessarily a good question for me as chair. There's far smarter people that have developed that, but basically it puts all that data into a consistent form, which we can then put into a 3D geological model, and from that, geologists will come up with targeting. And,
but it's using the past to predict
potentially the future.
Yeah. So you're saying these are the circumstances, geological circumstances. These are the known factors that have led to discovery of mineralisation in these areas. So where else does that environment and those factors exist?
Yeah, and so it's
computer-aided learning. Yeah.
There's drill hole data. There's a whole host of data that goes into that mix to build up that geological model, and then we use some modern geophysics to apply across that and to generate those targets. But again, proof is in the pudding, and Golden Eye was the first delivery of that. And again, all within
so this system identified Golden Eye as being a compelling exploration target.
I will always say there's never a replacement for a good geologist. Yeah. So the geologist has to interpret that data, but the AI puts it into a format that we're able to do that.
So it shows that the theory or the system works.
Yes. Oh, absolutely.
And now you're applying that same system, that same strategy and approach to other areas.
Correct.
On your package.
Yeah, correct. And so we've got a number of drill targets. So Cedar Bay, that will have news flow. But I would say then we would be targeting around Q1 next calendar year, which isn't that far away, for an updated study. And it's better than a normal ASX scoping study. It's somewhere in between a scoping study and PFS level. That will then show...
That'll be based on the resource you just put out.
Correct. So any growth will just be further upside. Okay, and we have other targets that we want to drill over the next 6 months. So we've got no shortage of targets, and I think we've shown that we can deliver on those.
So you can drive the inventory growth. That's one plank of the growth story.
Yep.
Then you do the updated economic study, whatever name you want to give it, which basically will take into account prices that are more reflective of the current environment, the substantial increases that we just discussed, to establish the sort of free cash flow that this can generate.
Absolutely, and let's just remember, current consensus is still way below spot. So consensus for gold is $2,600 US. Today, it's $3,700 US.
But presumably, you might put a ready reckoner into that study.
Oh, absolutely.
At the spot price, be it today at $3,700 US, this is the sort of cash flow you could generate.
Yeah, there will be a spectrum of.
So
prices.
The cash flow could be off the scale compared to the original study of 2022.
Absolutely.
Yeah, and then you move into the corporate activity, and well, that's beyond your control, isn't it, as to whether someone wants to have a pop at you, but it's always a nice bit of icing on the cake that this idea that someone might come along and pay a nice juicy premium and hey presto, that works for everybody.
Yeah, well, look, we're certainly not putting ourselves out there for sale. Our focus is to get the updated study. The economics will talk for themselves. The drilling success will talk for itself. We're focused on putting this back into production. And what happens outside of that can sometimes be in or not in your control.
Now, it's not like people can look at it and say, come raise, you've got about $20 million in the bank?
Yeah, we just raised recently. We could have taken a hell of a lot more. The book was exceptionally well bid many times over from quality funds, but we didn't want to dilute shareholders any more than what we did, and we're all shareholders.
Right. And your biggest shareholder?
Is Equinox, a fund out of New York, and they participated fully.
And it would be remiss of us if we didn't say Steve Parsons also has a pretty juicy stake in this?
Yeah, the management and insiders, we have over 10% of the stock.
Right. So you've got plenty of skin in the game at the upper level.
Absolutely.
Right. Well, it sounds like you've got a very cogent argument for why you think the stock is cheap. As you rightly say, every chairman and managing director says their stock is cheap, but the reality is you haven't really been marketing it that much. Perhaps that's where the opportunity lies for investors. How are you going to tackle that one?
With the help of a very good media advisor, hopefully.
And very hard to come by. Very hard to come by, I understand.
I've had a few cards come across my desk. Look, we've just come back from Beaver Creek conference, and that was nearly 3 days of back-to-back meetings. So that was seeing a mixture of new shareholders or potential new shareholders, existing shareholders, corporates in the region that want to get an update. So some of the largest gold, copper companies in the world know about our project now. So being able to deliver on that resource then a few days later after Beaver Creek is again demonstrating we do what we say we're going to do. And I would expect to see us over east, talking to investors into Asia, but also into Europe.
Well, you've certainly got a saleable story now, haven't you? You've established the sausage in the terms of the resource. Now you've got to create the sizzle. That's probably where the opportunity lies. Thanks very much for your time today.
Thanks, Paul.
You've been listening to The Whole Truth, a Resources Rising Stars podcast, produced by Resource Media, hosted by Paul Armstrong for Reed Corporate. Please note that Reed Corporate does not provide investment advice, and investors should seek personalised advice before making any investment decisions.